good afternoon or good evening, wherever you may be. I'm Linda Freed, and I have the honor of serving as your opener today and also as serving as the director of the Robert N. Butler Columbia Aging Center here at Columbia University and in the Mailman School of Public Health. And I want to give a warm welcome to everybody who is joining us today. We're very excited about the presentation that we're about to hear from Adrian Gore. And I want to welcome Adrian himself, who is a long-time member of the Mailman School, having served on the board of advisors, and a friend and partner. And Adrian, we're thrilled you're here along with your colleagues. Thank you. And with that, I'm going to turn this over to Alan Cohen, member of the Columbia Aging Center and associate professor and director of the program on the science of health, and to Ying Wei, who is a professor of biostatistics and the director of the Trail AI Lab here at Columbia Mailman School of Public Health. Over to Alan, and welcome.
Yeah, thank you, Linda. It's so great to be here to have Adrian with us. As you'll see, this talk is going to have something for everyone, I think. Whether you're interested in health policy and how health insurance could reshape healthcare systems, whether you're interested in what's the nature of health, whether you're interested in what AI is going to do for health, or how do we infer causality, pretty much everybody at this school, I think, or broadly interested in health is going to have something really interesting to learn here. So Adrian is the founder and group chief executive of the Discovery Group, which is a large health insurer. He's a member of the Columbia Mailman Board of Advisors. He founded Discovery in 1992 with the core purpose of making people healthier and enhancing and protecting their lives. Discovery has since evolved into a diversified and multinational financial services group. Discovery is widely acknowledged as a global thought leader in behavioral change and its integration with health, life, short-term insurance, investment, and banking. Discovery, listed on the JSE in 1997 under Adrian's leadership, has more than 12,000 employees and has expanded its international reach to 22 countries, impacting almost 26 million lives globally. In 2019, Discovery ranked among the world's top insurance brands and was named second strongest insurance brand by Brand Finance. In 1998, Adrian was recognized as South Africa's best entrepreneur by Ernst & Young, and in 2004 was chosen as South Africa's leading CEO in the annual MoneyWeb CEO of the Year Awards. In 2008, he received the InvestTech Award for considerable contribution in a career profession, and in 2010, he was named as the Sunday Times Business Leader of the Year. Alongside his commitments, he has worked with other leaders to stimulate entrepreneurship in South Africa. In 2017, Adrian received the Frost & Sullivan Visionary Innovation Leadership Award for Africa and the Ernst & Young Global Lifetime Achiever Entrepreneurship Award. Adrian graduated from Wits University in 1986. Adrian is the past chairperson of the Endeavour South Africa chapter, WEF Industry Council Agenda on Future Health, WHO Commission to End Childhood Obesity, chairperson of the SA SME Fund, and chairperson of the King David School Foundation. So you can see how lucky we are to have him with us today to tell us what they've been doing, and I think you're going to find yourself even luckier by the end of his talk. Without further ado, Adrian, please take it away.
Alan, thank you for that kind introduction. Just get my slides up here 1 sec. And Linda, thank you to you for the introduction, and thanks for decades of friendship, mentorship, and it's been a privilege always working with you. The presentation today that I'd like to give, and I hope I live up to the very, very high standards Alan has set, but it's really coming from our organization, how we've evolved. But essentially, I want to make the case for how life and health insurance can change population health, but at scale. And to an extent, maybe start with the end in mind. And essentially, it's all about behavior change. As simple as it sounds, it's very, very complex to achieve. So I'd like to take you through our thinking of this. It's, in a sense, a bit of a story of our evolution and what we are doing. But at its core, I think it talks to the power of potentially data and AI and how to use it at scale to change population health. Let me begin let me just start with context. This is not an investor presentation, but just to give you a sense of our scale, because I think the important thing about the presentation is the argument that companies like us can change population health. We operate in many markets, over 50 million lives now, in fact, impacted. And in fact, as part of our sustainability reporting, we monitor very carefully the number of healthy activities that we incentivizing change. And you can see that number is growing, I think, substantially. The organization is built on two distinct kind of pillars: our South African home business discovery and our global business vitality. But I think the critical thing to make clear is we built an organization, this idea of vitality, incentivizing people to change behavior and pricing and incentivizing and structuring that into the underlying insurance products, health insurance and life insurance, and growing that across a global kind of footprint. A central question, and you heard from Alan's opening remarks, we essentially started as a South African business, and the question always comes up: why a business model that is in many cases very different emerged from a country like ours, and how it's globalized? I mean, just to make the point, Discovery was formed in 1992, precisely at the time that South Africa went from apartheid into democracy, the time that Nelson Mandela was freed and became president in 1994. And really the question at that stage was the pressure on healthcare systems and how government would spread its healthcare resources to a much broader, the entire population post-apartheid, and the opportunity: could we build a health insurance business that was needed to allow people to buy up and fund healthcare on a sustainable basis? It seemed a very compelling idea, but the problem was a very difficult one. High levels of disease, 4 times, in fact, the disease burden, the highest levels of HIV in the world. So typically really high levels of both NCDs and infectious diseases. Problem is a shortage of doctors, doctor density, and just provider density dramatically lower than virtually anywhere else, any certainly developed market, as you can see from the middle of the chart. And then critically, and I think rightly so, government's view about fairness and equity. So no ability to really price premiums on an accurate risk basis. It was an egalitarian mindset, more extreme, more substantial than I think Obamacare, in the sense of guarantee issue, community rating. A health insurer had to offer a kind of a flat rate based on benefit plans to all people, very little ability to kind of take any exclusions into account. So a very egalitarian regulatory framework. So when you put this together, the problem we faced was, too few providers, in a sense, to create any kind of managed care. There's no leverage on the supply side of the market. At the same time, no ability to really price the risk accurately. And so kind of the only kind of lever we could pull, and it's important to say that while it is a tactical lever, it was also in terms of our emotional sense of the right thing to do. Could we make people healthier? Could we build a business model on the simple idea of make people healthier, reduce the demand for healthcare, increase health span, increase longevity, and build a very different model? And so that became the purpose of the organization. But I do want to give you context that it came out of a complex kind of financially hostile environment that led to a necessity to kind of create things in a very different way. The manifestation was a model of vitality that really incentivized people to be healthier across prevention, nutrition, physical activity, all the way to disease management, using incentives of enablers, that were devices as devices came available, rewards like travel, discounts on healthy food. So really a very strong mix across all issues, but really the idea of getting people to understand their health, get healthy, and get rewarded. And on the left-hand side of the chart, the kind of architecture of the model was kind of putting the institutional capability of health or life insurance on the back of this vitality methodology and integrating the two. What happened to us is it evolved very quickly, and it evolved in a very compelling way. And to an extent, working with Michael Porter at Harvard, his concept of shared value business, the idea of could business create a business model that is good for society while it's profitable. The amazing thing about the model and about, in fact, our industry, and that's maybe central to my case, is the simple idea that when people are healthier, we are more profitable. It's an unusual situation to be in. I think the only other actor, I think, government, that has that same relation, in the sense when people are healthier, in a sense the economy's potentially more productive, a bigger tax base, etc. But for us, it's an absolutely direct link. When people are healthier, we are more profitable. And so we are completely and totally aligned to our customers, unusually so. And so on the right-hand side of the chart, you can see this shared value virtuous cycle. If the model works well, it's good for members or customers, it's good for insurers, and it's good for society. There's no downside to it at all. And so kind of because there was no dissonance, the model the model really kind of evolved very, very well. What happened to us and what made the model globally relevant, I'm going to come to the point about making people healthier, is just a number of massive trends that you know well, probably better than me, but are incredibly powerful trends that, if anything, are accelerating at a dramatic rate. The issue of social responsibility, the issue of stakeholder capitalism, the issue of companies and institutions like ours wanting to be less, not transactional, but in fact having a purpose, was a very strong driver. Issue of demography, virtually every country in the world is aging. Governments have less fiscal room. They are highly indebted. So healthcare systems more and more under pressure, much more pressure on private provision systems, for sure pressure on national health systems, looking for different ways to kind of reduce the health burden, and that's powerful. But very importantly, two things that are central to my presentation today. One is the nature of risk, the understanding of mortality or morbidity risk, sickness risk, and the other is technology. The quantified self, but obviously now the power, the incredible power, and just the pace of AI and what they can do. I think the coalescing of these forces has created a dramatic kind of pool for what we are doing. It's the nature of risk that is so critical, and I want to make the point. I'm by profession an actuary. When I was trained as an actuary many decades ago, the entire mindset was one of pricing risk, whether it's sickness risk or it's mortality risk, as kind of predetermined. In a sense, you looked at selection, you looked at pre-existing exclusions, you looked at pricing methodologies. There's virtually nothing in the science about causality and behavior, and that's critical. And so because of that, insurance models largely are, in a sense, outdated as you understand the nature of risk. And of course, the other point about the power of data and data science and AI, in a sense, when you bring the two together, you get considerable power that actually isn't built into these business models. And so trying to understand this is so critical to the way forward. And I say this without criticism. I'm proud of our profession, but the truth is it is built on this dogma of kind of selection, not causality. But when you look at the data, you see the extent of the properties of the data and kind of how it plays out is quite remarkable. I think one of the biggest assets we have, and one of the things I think we can offer to society, is the scale of the data. We've had this vitality structure running now for 3 decades. So you can see from the slide, it's an unusual data set, 60 million life years across many different dimensions, very, very accurate health claims, clinical data repository, nutrition data, sleep data, financial data, mortality data. The scale of it and the diversity of it is remarkable. And bear in mind, as I think you'd understand, when you're trying to understand causality and correlations and mortality with death rates of about 3 per 1,000, you need a huge amount of data over a long time to have enough deaths to kind of draw a conclusion. But you can see on the bottom right-hand side of the chart, just the scale of, device data, engagement data, sleep data, etc. The data set is very, very unique, and it's kind of underpinned our competitiveness. It's underpinned a partnership we now have with Google to use this data in a way, hopefully, that really adds considerable value to our customers and to society. But the data is telling us remarkable things. So on the issue of causality, behavior change is remarkably causable. When we adjust for confounding factors, you can see, for example, the power of physical activity. On the top on mortality, on the bottom on healthcare costs, you can see when people go from being sedentary to being physically active, you can see mortality rates come down over 50%. It's remarkable. And you can see that this is an example, 45 to 65 on the left-hand side, on the right-hand side, over 65. But you can see it's pretty consistent. It's quite remarkable. And it's an important issue because I think people often think that it's too late when you get older for these behavior changes to make an impact. It turns out quite the opposite. It's never too late, and the effects are very, very profound. And when you look at healthcare costs, not quite 50%, but 30%, the effects are dramatic. So the causality is absolutely huge. You sit in different slices of the data. We did a very big study we published 2 years ago, I think it was, around this heuristic of 10,000 steps. We used our data to try and understand what level of step count should we be incentivizing. And as you can see, it's very interesting. You can see as you increase step count from the chart, you can see mortality comes down dramatically quickly. So again, highly causal. But interestingly, kind of an elbow at about 7,500 steps. So to an extent, I'm not saying people should not do more than that, but in a sense, you get a lot of benefit at 7,500 steps. And amazingly, you can see consistency by age once again. So the causality is very, very strong. The other point we're doing a lot of work on now, and we've brought this into our models globally, the power of sleep. We have 47 million nights of sleep data, and looking at the same kind of approach, taking out the confounders, you can see the effect of mortality. People that sleep irregularly less than 7 hours experience 22% higher mortality. And you see the other way around, kind of if people move from being, bad sleepers and they improve their sleep, you can see that in fact mortality reduces. Same effect on hospital claims, and there's a whole lot of other areas we're looking at: diabetics, BMI, the effect of the kind of the causal effect on BMI, as you can see on the bottom right-hand side of the chart. So again, just making the point of the incredible causality of things like physical activity, sleep, and other areas. We've also done a lot of work on habit, on the science of habit. Habit is very, very important. Once you get people to form a habit, from our perspective, kind of actuarially, we can then predict the value of behavior, because we know once you've got a habit, you can kind of understand its long-term impact. And we're doing a lot of work on understanding how to form habits in physical activity, clinical behaviors, sleep, etc. But the power of habits is quite incredible. I think it's really, really exciting. So coming back to, for example, the sleep example, the steps example, as I said on the left-hand side of the chart, we found from the data that it takes just 7 to 15 weeks to get people into a habit in terms of step count. So kind of if you incentivize, if you focus, if you communicate in the right way over a 7-week period, you can get people into a very different form of habits. It shows you the distribution of habit formation. And I think very powerfully, strong habits are not that malleable. So if you can get people into a strong, good habit, that's a very, very powerful issue around healthcare and around our ability to kind of get people to change behavior. So it's causal, it's habitual, and very importantly, it's highly elastic. Life expectancy or lifespan and health span from our data is highly, highly elastic. So on the left-hand side, you can just see how we look at it, kind of total lifespan, splitting it up into healthy years, not healthy years, and those unhealthy years. You have the ability through the data to kind of assign weights around what those risk factors are that probabilistically are going to lead to that, lack of health span. So breaking up lifespan into healthy years, unhealthy years. And amazingly, this is the point of elasticity. You can see the levels of elasticity: a young, moderately healthy 30-year-old down to an advanced age 70-year-old who has a range of chronicity. You can see that ironically, that I think it's maybe obvious, but at young ages, the elasticity is not that great. As you get older, it gets bigger, as you can see. But amazingly, this I think it's a female, age 70 in this particular case. By changing one or two behaviors, this individual probabilistically can double their health span from 6 years to nearly 12 years. So over 90%, increase lifespan by over 45%. So kind of illustrating elasticity as one principle. The other is kind of the idea not only is never too late, but in fact, it's particularly powerful when you're chronically ill or in later years. The effect of behavior change is absolutely dramatic. So it's causal and it's elastic. But this is the thing. It's highly specific as well. If you're thinking about efficiencies and trying to get people to do the right action, getting the right actual thing for the individual to do is not that simple. So from our data, just two examples: a 45-year-old female, diabetic, hypertensive, etc. Kind of on the surface, a very similar risk profile. But there's a range of things on the left-hand side you can do, from kind of fundamental health and wellness all the way through to complex disease management. It turns out that in fact, the remedies are different in the one case, exercise, and the other, chronic disease management. You can see the difference is driven by different things. So you have kind of, I think, with the data that we're seeing considerable causality, elasticity, specificity though of behavior change. And it's incredibly exciting, I think, when you see the numbers we're seeing. If you can get that behavior change to happen, it's remarkably powerful, and we can really change lives at a dramatic rate. But there's a problem here, and I think you know it well. The problem is kind of the behavioral bias, that even if people know this, or even if you know this from the data, actually getting people to change behavior is much more difficult. And two distinct issues that we know about. That's, I think, where our industry has a massive role to play. The first is hyperbolic discounting, that people, even if they know these things are unhealthy, they discount the future at high rates of interest effectively. So they overconsume healthcare because it's immediate and the benefit's immediate and the price is zero. But they won't change behavior because the price is immediate. Do this physical activity, avoid this food that you like to eat. But in fact, the benefits are only 30 years away, and therefore you kind of have this hyperbolic discounting playing against you. The other issue is obviously over optimism. You can see from this chart, I always find these statistics quite bizarre. That in fact, regardless of the number of chronic illness, chronic conditions people suffer from, most people think they're in good health. And even on the right-hand side, you find that people who've had a heart attack, from the data we see, 30 to 40% actually don't stick to their medication regime that they should do. So you're fighting against this kind of hyperbolic discounting, over optimism, even if you have the data and you have the ability to kind of illustrate to people what they should do. And to an extent, that is where our industry has a unique advantage, is because we are completely aligned to our customers. If they are healthier, we are more profitable. And so we can use that profit, that surplus, to fund incentives that are required to get that behavior change. And that is at the core of the model we've kind of pioneered, using incentives in the right way to get people to change behavior. So breaking that hyperbolic discounting kind of doom cycle, kind of communicating carefully around the over optimism to bring people to a sense of reality, what they need to do. But getting to the core, I think, issue of the presentation and of your series, of kind of the power of AI, to an extent, I guess, maybe positioning to you, what we are trying to do is get people to do exactly the right thing, with the right context, in the right way, incentivize them with the exact right value, so you get a completely efficient system. If we could do that at scale, the effect on people would be absolutely dramatic. So to an extent, we have worked on this for a number of years, and over the last 2 or 3 years, we've built a massive capability, and now partnering with Google on this concept of Vitality AI. I want to explain it to you. Of course, it's a commercial structure, but I want to give you a sense of what we're doing, and again, why we believe it can make a massive change, and hope it brings the principles to life of the power of AI in this context. So it's essentially a capability. Think of it as a platform that we are putting into our own businesses. It's in our businesses. We're rolling out with our partners globally, and we'd like to kind of stick this platform into every insurer globally if we could do that. So in a sense, change the business model to one that is less transactional and gets people to change behavior at scale. And that kind of is the opportunity. So there are kind of 5 layers to this. The first is the data I showed you. The second is kind of the dynamic ability to risk assess people. The third is using that data, the risk assessment, through a complex process of a recommender engine, in a sense. The fourth layer is kind of incentivizing engagement, the right incentives with the right partners in the right way. And the final layer is essentially the actuarial insurance integration, how you price this into financial services, into health insurance, into life insurance. I want to point out that in health insurance, I guess the link is obvious. And Alan, you made that comment at the outset. I think the power of this in the context of health insurance is kind of obvious. Life insurance is an interesting application. Although it's a much more silent industry, it's of considerable scale, and you have the individual with you as a customer for 30 or 40 years. So you have this almost arbitrage of value where people are paying a premium for 30 or 40 years. And if you can bend that mortality curve or that morbidity curve down, you create considerable value over decades, and that value can be shared with the customer in a way that really kind of enforces that loop. So the life insurance piece, don't underrate it. It's incredibly important in how we can kind of change population health. But let me just briefly just go through the layers with you. I mentioned the data layer and the risk assessment layer, so I think that's clear. But essentially, the recommender layer is where our data works, so our Vitality AI data works with Google, with its Gemini clinical LLM capabilities, bringing together our specific data on the client, understanding risk factors, together all of the stuff that Gemini knows about health, its LLM capabilities, its reasoning, etc., to get to a single point of optimization. What is the most efficient thing? What is that next best action that we should get people to do? And in what way should we communicate it, and how should we incentivize it based on their particular proclivities to get that behavior change? And, the intellectual construct of this is really the idea of value and propensity. What the modeling tries to do is assign a value through a causal model and propensity through machine learning to understand what's likely to happen. And of course, I think you'd understand kind of those actions that get the highest value times propensity are the ones that should be surfaced up. So if you have a high value intervention or behavior change, if there's no propensity to do it, it's probably a waste of time. On the other hand, if you have something of no value but high propensity, it's also a waste of time. So this kind of is an optimization problem of kind of optimizing value times propensity across many different variables, and understanding your propensity through the machine learning and all the data we have, exactly how you should communicate it, what context you should give, in what language that individual for example, understands what their content is, why you're telling them to do it, and very importantly, in a way that they actually will do that action. And critically to the next layer, the fourth layer, the issue of incentives and how we structure them. This is an area of considerable importance. We have a global partner network now that's integrated into our structures, So enabling partners like Apple we work closely with Device, Aura, Garmin, etc. You can see gyms and physical activity partners, all the way down to reward partners, where things that actually get people to change, things like discounts on flights, travel benefits, hotel benefits. So it really is a complex network integrated into the platform that we can use. But the powerful thing here is the ability to communicate and provide the right incentive level based on the value that's being created. So really the true hyper-personalization of the shared value model. So that is how the platform works. On the right-hand side, there's a range of different ways of incentivizing people. Statuses, you get a status for how you engage, gamification. Very importantly, something that we've used really well, a partnership with Apple. We have this concept of active rewards, where essentially you need to be physically active, do your step count that's personalized to you every week. And if you achieve that, you get a very simple gamified reward. It started out with a Starbucks in the UK. That's where we pioneered the idea. It seemed to be a very simple idea. It is amazing how that gamification changed how people, kind of focused on physical activity. Just the concept of kind of that potential gain of a small gamified reward created behavior change at a rapid rate. So today, I think we have 5 million people following the active rewards regime. We then did a partnership with Apple using Apple Watch as a device. But the power of this benefit was kind of a lost-framed idea. You get the watch for free, in effect, and you pay for it monthly. But the monthly installment flexes based on how you engage. So if you meet your physical activity goals, your step goals that are personalized to you, the installment that you pay that month is zero. So to an extent, if you're physically active in the right quantity, you don't pay for the watch. So in effect, it kind of pulls on loss aversion. You've got something to lose. You've got the watch for free, and if you're not physically active in the right way, you lose that watch. You can see from the chart, the chart we did a study with Rand around just the effect of this. It's amazing how it kind of induced physical activity and how it kept it sustainable over a very long period, as you can see from the chart. And I think through the program, I think we've issued over 1 million Apple Watches, to across the world around the structure. So trying to illustrate to you that despite the science of kind of behavior change and causality, the reality is that getting the incentives right, the quantum incentives, how they're served up, is also critical to creating a behavior change. And then getting to what may seem dry, but I would like to just explain this to you, getting to kind of the actuarial pricing of how this works. Given the scale of the data, we now have a platform of reinsurers, Hanover Re, Swiss Re, some of the biggest reinsurers globally that work with us, so they can price the reinsurance that we offer partner insurers around the world based on these actions. It allows us to globalize the model because, in effect, any insurer, they're sitting in Germany or in Asia Pacific, whatever, when they sign off their premium rates, they've got to be comfortable that they can carry that risk. And the ability for us to actually offer reinsurance on the back of that, they can pass their risk back to us, in effect, is very powerful. So we have upfront selection discounts. We offer discounts on certain behavior change parameters, habit formation, physical activity, etc. And to an extent, it creates a very, very different ability to scale this model and, again, change population health at scale. But I wanted to, excuse the actuarial science segue here, but I did want to just make this point because it's actually, I think, in life insurance and health insurance, the way to shift population behavior is different. Just bear with me. This is just wanted to explain the life insurance model. It really does explain how things have evolved. If you look at traditional life insurance actuarial pricing, the graph in the middle tells how it works. Mortality, as you can see on the red chart, kind of as people age goes up. And what insurers do is they price a level premium. So if you buy a life insurance policy from the Prudential of the US, or whatever it is, you get a guaranteed rate over your lifetime. The assumption is in that there's no causality, no behavior change. There's an assumption of how the population ages, how it gets sicker, and that's priced average across the board. What you find in a population that is covered on the right-hand side, assuming you cover 1 million lives, is every year there's a certain lapsation rate. People drop out of the pool. The point is, healthy people are the ones that drop out. The sick never do. They've got life insurance coverage. It is valuable and they stay in the pool. And so what you get is over time a degradation of the pool covered. And you find over time you're left with sicker lives and a smaller pool. The approach that we've taken in the shared value model is very different. Essentially, it's kind of much more equitable. It keeps the uncontrollable risks as part of the risk pool, but essentially based on how you engage, as you can see on the bottom, it's not a flat rate. The rate kind of fans out slightly. So if you engage, your rates go down 1% a year. If you don't engage, they go up 1% a year. So it's a gradual kind of equitable spread of rates over time that works remarkably well. The effect on the population covered is firstly, you get a lower lapse rate. People are engaged. It's a completely different value proposition. Instead of a policy that you put in your file that, your spouse takes out 30 years later, this is an active, engaged product that people are going to, go to the gym, getting discounts on healthy food, flying at discounts, etc. But critically, healthy people also are getting value. And so your lapse rate or your persistency is higher, the pool is bigger, and it's made up of a much more diverse set of healthy and unhealthy people. And so the aggregate premium we charge is lower, and the number of people covered is more. And to an extent, I'd put it to you that is kind of core disruption, the ability to bring prices down and to cover more people. That's what we need to do. In the case of health insurance, the approach is different. In many markets, you can really accurately price risk. In our home market, you can't. In the US, you can't. But you can take these factors into account in different ways. Health insurance is annually repriced, as I think you know. But I put it to you that I think a very, very fair and equitable way, and I think, again, coming to the power of AI and hyper-personalization, if you're hyper-personalizing these to every individual is treated completely fairly. No matter your risk factors, you are given the things that you should do. So whether you're chronically ill or you're super healthy, whatever that may be, the program is tailored to you. You're incentivized in the right way. And so to an extent, it's up to you to manage your health according to those models. And so instead of, and we're doing this with a number of clients in the US, instead of kind of a flat rate, the concept of the employer bearing the cost of kind of the core cost of healthcare, with individuals bearing the cost of engagement, allows kind of a flexible model, taking into account HIPAA, the Affordable Care Act, etc., in a way that is much more equitable and fair. So to an extent, we're discussing with clients and potential clients this idea of a small flex in the contributions, the employee contribution, based on how they engage in the program. It creates a much more fair, much more equitable approach, and it gives people a much more powerful reason to engage. And again, I think once you do this, you get the population covered to engage in the program, not just because of the incentives and rewards that they get, but because of the actual financial difference it makes over time. So just demonstrating how the final layer of the Vitality AI stack, how it kind of integrates into the pricing of insurance, be it health insurance or life insurance, is incredibly profound and important. And then the final point, I hope I'm not being too verbose here, but the final point I wanted to make is, forget about all this complexity. Our aim here is to bring us onto the face of the mobile in a completely simple way. I mean, I think we're inspired somewhat by kind of Apple's CarPlay. It doesn't matter what car you're in, what vehicle you're driving. If Apple CarPlay appears on the dashboard, you know it, you've seen it before, you feel at home. We're trying to create a very simple UX of all of this hyper-personalization appears. 2 rings, a physical activity ring, a sleep ring, all of the AI and personalization is there. So the actual step count, what it's incentivizing you to do, how it talks to you is completely personalized. There's priority actions that tells you to go for certain checkups based on certain risk factors. There's high risk management, disease management, coaching that can be done, and access to the various partners and discounts on the face of the mobile. So all of this entire kind of how can I say, stack that I've explained, maybe in too much detail, but the stack I've explained should manifest on the face of the mobile for the customer in a very, very simple way. And if we can get that out to tens or hundreds of millions of people, the ability to affect health is substantial. As I said at the outset, we're doing this with many partners across the world. And so let me end. I hope I made the case. I mean, just to maybe end where I started, a deep conviction that because behavior is so causal, if we can get behavior change at scale, it can make a dramatic impact to hundreds of millions of people. And I make the case that the alignment to life and health, because when people are more healthy, we are more profitable, gives us the ability to share that surplus with them through incentives and rewards, and change this behavior. And so I think we're in a dawn of a very different age, because I think the power of AI with the data now gives us that ability to do this at scale in a hyper-personalized way. So exciting times for us, and I hope it adds to your thinking.
Oh, hi, thank you so much, Andrea. And it's really a great, inspiring, and data-intensive presentations. I think we now move to the Q&A sessions. And for everyone who is joining this talk, and you can put your questions into the Q&A sections, right? So, and while waiting for the questions from this audience, I would like to start a few questions that is prepared by our faculties, right? So, and I want to start it, I think I actually want to start the first question is about the Vitality Columbia collaborations. I think as Linda mentioned, Vitality Discovery has been friend of Mailman for many, many years, and we are currently also trying to building the collaborations with the aim to jointly pushing for new science and to increase the impact of public health using your word at scale. So I want to hear from your perspective is and why thinking that is Mailman, Columbia Mailman is the right partners, and what do you excites you the most, and what would be possible coming from this collaboration?
Well, listen, I think we've been partners of Columbia for a long, long time. I'm very, very proud of it. We are doing some really good work, and some work we're doing now with Alan is around the science of health and aging and kind of the foundation models. I mean, understanding the pacing of aging and how you can in some way measure it and reverse it. So there's work happening now at the moment. I know we've kind of looking at a specific project now to do that at scale. I mean, we are very excited about it. Our ability, if we can add to this, to our capability to actually understand the pace of aging, and again, in centers and in giving people context, the ability to show them what the effect is. We have this idea of vitality age, where it's kind of these kind of measures have been around a long time, but in today's world of really understanding the pace of aging, and I know there are a lot of models. I think you have the Daniel Belsky pace of aging work being done at the school. There's a whole lot of stuff that you have. Mixing that with our data is going to be incredibly powerful. So there's a number of areas we've collaborated on. This is one of them. I have my colleague Emil Stipp on the line. Emil, who is our chief actuary of data science, and in fact is head of our Vitality AI initiative. I don't know, Emil, if you want to add anything.
Yeah, maybe just to add to that, exactly. We've been working together for a long time, but what's so uniquely powerful about this is that we're generating a huge amount of additional data now. As sleep is measured more and more, now that becomes part of the equation. So our technical challenge is bringing sleep into this and changes in sleep behavior. What is the impact of that on longevity, given that somebody already exercises? That makes it fascinating. So we're very excited about continuing this relationship as more and more data enters the ecosystem.
I think that's very exciting to hear that, especially for many of us who have been thinking about academic industry partnership and to changing the impact at the scale, and that means a lot for us. We're very excited for that. So I guess I'm looking at the questions. So actually, I may picking one questions from the audience is actually from our new dean. So, and the question is, this was an outstanding presentation about the important work, and thank you so much. And most of the data on the benefits were derived from before the time of the GLP-1. And do you have any relative contribution benefits from the different factors, including the medications themselves, and after they become available? I guess they were talking about those emerging medications could changing a lot of the risk factors for health.
Yeah, Emil, I think you can say a lot on that.
Yeah, thanks, Adrian. Again, it's been fascinating to see GLP-1s come into the environment. We can observe in our data that people are taking GLP-1s. We can see when they start, when they stop. And what is truly interesting is how does it affect their exercise behavior? So there's two things that we can tell from the data already. And bear in mind that this is still fairly early, but you can see it coming through in the data. When people start taking the medication, you can see their healthcare costs going down. So it certainly has a positive causal impact on healthcare costs in a fairly short period. We observe an effect from about 6 months onwards. What's fascinating about that is that some people see that as a silver bullet, and whatever little exercise they did before, they stop exercising because now they're taking drugs. But others, as they start losing weight, they take up the opportunity to exercise. And what we see with that is that then when they stop taking the drugs, the benefits continue. They keep the weight off. They get into an entirely different lifestyle. So now we've been thinking that that's what we should encourage. So in some of the products that we're now launching, the drugs are still expensive in many of our markets, but what we're trying to do is to say we can offer you a discount off the drugs, provided that you exercise, provided that you take it up over time. We know that obviously the select population, people are overweight typically if they take the drugs, and what that means is that it's harder to exercise. So the exercise target should be lower. And now, as I said again, with sleep coming into the equation, we can see the impact of GLP-1s on sleep as well. We think that there will be effects there. So again, having this data longitudinally gives us the ability then to analyze the effects and to think about in product design and to incentivize the right things.
I think that just a lot of the new modalities can take into the considerations. There's also excitements, right, for the future. So I guess I probably will turn to one, I think during the presentations, and there's one word was mentioned multiple times, that is causality, right? So the next question is coming from Alan, but I think that's also very, especially relevant to many of us at the Mailman who does the research in public health, epidemiology, also biostatistics. I think the mortality, I think you're really using rich real-world data to learn the interventions and can change the behaviors and can make people stay healthier. So that is different from more traditional ways of randomized clinical trial. So I want to hear from experience and perspectives. And what do you think about the causality and causal inferences in these settings? And do you see this kind of real-world behavior-based data and changing how we think about evidence and causality more broadly in the setting of public health and biomedical research?
Amila, I think you must just go through the issue of behavior change and the longitudinal nature of it rather than kind of a randomized clinical trial. Just give insight into that, I think would be very helpful.
Yes. Yeah, I think absolutely. We see that if you have the data longitudinally, and if you can observe a delta in behavior change, and if you have enough contextual data to say that we can adjust for all the confounders. Now, all of those ifs, we say that in this data it exists. We understand behavior up until the point of behavior change. So we know whether you were exercising before, we know what chronic conditions you had, your underlying pathology. We can see how claims change, both before and after the behavior change. And the requirement then is to say that, well, how do we judge the qualitative level of behavior change? That's where habit comes into it. So obviously 1 night of good sleep is not going to make any difference, but a habit of good sleep, that makes a difference if it's a change. So what we're looking for, Ying, in the data is the delta in the behavior.
Yes.
We adjust for the confounders and we observe the delta in the outcome. It's a dose-response type of relationship. And the reason why that's necessary is effectively everybody who participates knows that they're doing it. You can't have a double-blind type of design because by definition, if you exercise, you know that you're exercising, right? So that's why one needs a different methodology to basically get the effect. But the key there is it's the scale of the data. So having enough, because our target variable is a small percentage, 3 per 1,000 mortality rate. And to be able to observe that longitudinally then gives us the ability to say that this is a causal effect. Of course, we apply tests on top of it. We say, well, if it's causal, what you'd see in the data is that if somebody stops behaving this way, the risk increases equally and to the same extent as to what it decreases if somebody takes up a healthy behavior. And again, that's visible from the data. So I hope that answers the question.
Absolutely. I think that's a very interesting question, right? So I think one central question and we're all facing is how we generate the credible evidence and when real world data become available for research for public health in many areas, right? So I think there's still a lot of research and lots of calculation to done. And what you have been done on your side certainly gave us a lot to think about. And that's very interesting. So I think picking another question from the audience is, I understand is incentive, right? So it's mixed behavior changes. So that was clear, right? So, and it might be more powerful and moving from the behavior change because of incentive to form a habit, right? So one question from the audience. So from observation is how many weeks it takes to form a habit?
So the data we saw on step count is around 7 to 15 weeks. And in fact, that analysis, which is quite substantial, showed the distribution of how long it takes to actually form a habit. it's got quite a long tail, as you see, if you look at the presentation. I'm not sure it's available. There's quite a long tail, but there's a very high modal point at 7 to 15 weeks, to 7 to 10 weeks. And that's not a particularly long space of time. So, what we didn't cover here, which is very, very important in how we get behavior change, is in fact kind of habit laddering. The idea of how you get people to a habit is that you don't just simply say go from being sedentary to do 7,000 steps. It's just too much. There are behavioral ways of giving people kind of a step up function over time to get that behavior to change. So it was a simplistic it's a simplistic piece of the analysis. I think in the personalization of what we do, we kind of serve up personalized step goals that kind of seduce people into more and more steps, and you form a habit. But 7 to 10 weeks or so is not a dramatic amount of time. And if you can do that, you make a massive difference to the individual. For us, actuarially, once people do that and we have a habit, and it's a good, strong habit, we can value that. In other words, we can take a present value of that behavior and financially kind of build that into our financial models and therefore fund the incentives and rewards. So it's a very, very sophisticated, I think, next layer of causality of understanding habit, strong habits, weak habits, and how you value them. But the data is actually compelling. It's a very short space of time. Obviously, it's different with different kinds of activities, but physical activity is one of the big drivers. Sleep and meal may be different. We'll see how that plays out. But again, getting people, you can't control quality of sleep, but you can control when you go to sleep, at what time.
Right.
So kind of and that's what we're focusing on. Go to sleep at the same time within an hour. We're incentivizing very simple things to change habits.
Well, I think that's super interesting to see the data on that, right? So I think, do you have the data when people form the habits, and if you take the incentive away, would you able to see the habits being sustained over the time, or it depends on individuals?
Well, I think the habit by definition, if our science is right, is it's become a habit.
It's
So
a
the
real
incentive,
habit.
the incentive is inquired to get you to a habit, but that's the power. Once you formed a habit, our job is done. I mean, there's probably a half-life. You saw that other analysis. Over time, it degrades, but very slowly. And our data shows that good, strong habits are very, very durable, which is
Oh,
great.
that's fantastic. Yeah, that's great to know. If we were able to observing that once you form habits, it really stay for a long time. So I think that would be really fascinating. So I got several questions and looking at the question from the audience, right? So several questions is talking regarding about the data privacy issues, right? So I probably want to turn the topic to a little about the issues of public trust, right? So I think the AI has such a big topic in the society now, and we certainly hear the different views, right? So from AI experts, and we're very excited, energized by the innovations the change could make. And we're looking at the public opinions, and they tend to be a little more cautious. There's a worries about the data securities, privacy, and the AI overreach. So I think from the academic, for the industry leaders, right? So you have these unique opportunities being engaging on the both sides. So I want to hear from you is what's your view in terms of this gap, right? So, and especially in the vitality AI, and how do you balance the excitement of the change of innovation could bring, and also the legitimate concerns from the users in terms of trust, privacy, fairness, and also responsible use?
So I think it's a great question. I think the aspects of trust around AI at the moment is existential. I don't think we can answer all the questions, but I think there's important points to make, and Emil, you can add in if you want. First, I think we are very careful about having a very careful kind of set of principles we operate on, which we don't violate. And I think amongst our customer base, I think we've developed that trust as an organization. Secondly, it's important the incentives are a powerful piece of it. We're incentivizing things for good. So there aren't penalties in this, and therefore people do trust it and don't see it in any way in a penal way. And we are very, very careful about how things are served up. The incentives are appropriate, and there's a range of different layers of checking to make sure that the things that we serve out are correct. So I think have deep trust amongst our client base. That doesn't mean there aren't existential concerns about it. But to the extent I would put to you that I think the power of incentives, the power of the fact that we are only working for good, trying to make people healthier, it's not a penal system, to an extent mitigates against some of the fears. And I think there will be a part of the population wherever you operate that will have some mistrust about it. But on balance, we found people, I think, essentially trusting the vitality system because it is incentivized and it is for good. All the issues of data privacy are very carefully done. We never ever we work with anonymized data. We operate in very tight data privacy laws. We never take data across borders. And I think from a regulatory standpoint, that is very, very heavily policed. And our value system drives that very hard. So it hasn't for us proved to be a barrier at this stage. But I have to concede, I think there will be, and there must be, rightly so, concerns about AI and making sure, all these concerns are in some way dealt with, understood, surfaced, etc. I don't know, Emil, if you want to add anything to that.
Yeah, I think it's really in the reward. So somebody gets something out of it if they share the data with us. But I think the second thing is that actually it's always their choice. You don't have to share your sleep data with Vitality. If you do, you get rewarded for it, and we help you to sleep better, and you can see what impact it has on your health. So in my mind and in our mind, I think it is always important that we have a reason to ask for the data, and people understand that reason, they get something for it. So, and I think we have actually not struggled to get that message across in the sense that it's very visible to them what they get out of it. That also means that it's sustainable. In other words, we continue then to get the data over a period of time, which means that we can do these studies. So the choice and autonomy, the fact that it's rewarded, I think those are very important components then of making the case to people. With all of the other stuff on security and privacy and making sure that we keep the data safe, with all of that taken together, it helps us to basically make that case to our customers.
If I could, I might jump in here with another question from Linda that got transmitted to me. And she says, Adrian, would you please speak to the potential impact on health span in the aggregate, and then the scale needed at which to achieve it?
I mean, I don't mean to be flippant. If you do it to one person, I think it's beneficial. So if you can get behavior change at one level, I think it's beneficial. But to the point, if I look at our home market, which is the longest, our levels of mortality are dramatically lower in the million or so people that we look at very, very carefully. And the health span is a lot longer. I showed in that slide the level of elasticity of health span. It's incredibly elastic to these behaviors. So it differs, from a couple of percentage points to, if you're older, 50%. So when you say the health span, I mean that's maybe my ask here, or my picture, that as an industry we cover tens of millions. In fact, we cover billions of people as an industry in total. If we could make these practices standard, I think we can increase health span dramatically across hundreds of millions of people. So I hope I'm interpreting the question. I think with the power of data and AI, the specificity, the incentives and rewards, and the fact that it's in the system, it's in the insurance system, the economics. I think we can increase health span because it is elastic at scale. I mean, that's the I showed in the early data, we created 675 or so million healthy activities, from physical activity to screening, across millions of people over the last year. We kind of audit that, report on it. I think the effect on health span of that scale is significant. It's maybe something we should measure more. We should switch. I know the world, rightly so, is focusing on health span. I think our kind of actuarial data is more looking at mortality rates and morbidity rates, which are pricing factors. But I know at a social level, we want our people are living longer and healthier, compressing mortality, morbidity, compressing sickness. It's something we should maybe report on. But I can tell you, our kind of high status members have life expectancies dramatically higher, 10, 15 years higher. So I hope I'm interpreting the question. I mean, that's maybe, Linda, I think is kind of almost summarizing our picture. The core of this is through behavior change, we can dramatically increase health span at scale.
I mean, that was one of your slides that really struck me the most. I mean, one of the big outstanding questions in like the geroscience and longevity field is, if you have these interventions, the hope is that you extend the health span and you compress the disease span or the unhealthy span at the end. But that's an open question. We don't know whether you're kind of stretching it all out proportionally, or whether one gets more stretched or another. It seems like you have the answer to that, right? Your answer is that, at least with these kind of behavioral interventions, what you get is longer health span and no change up or down really for the unhealthy bit at the end. If I remember seeing your data, like it's not like you really compressed a lot at the end, but you also didn't extend the unhealthy period at the end. And I think that, that's kind of crucial. I mean, if you guys are ever interested in publishing, I think that would be of a lot of interest to the field.
That's a very interesting observation. It probably depends on risk factors. I don't think I'm not sure it's a heuristic, but I think it probably depends on risk factors. I think that is a crucial issue. I think from the data we could ascertain quite easily. But I will tell you, it's kind of, I don't know if you'd agree, it's a colloquial or kind of just observation. The strategy is people often feel, they get into their 60s, that it's too late for me. I wasn't help, I never ran, I didn't do the stuff. And for some reason, it's almost like dogma that, well, I've given up. The data shows quite the opposite, that if you can actually get people to, in advanced age and at a senior level to make those changes, the effect on health span, which at a societal level, the effect on healthcare costs on national health systems, etc., is profound. So I think we should switch to that kind of to understand the compression versus life expectancy and what that delta is. Does it behave differently? But at the same time, we need to try and get people to understand it's never too late. It's a simple message, but a powerful one.
Yeah,
Completely.
I agree. I think that's a very powerful messenger. Like, so people like us, I think building on the level will probably want to pick one question from our student, right? So, and there's one of our students asking is, I think very fascinating talk. So they want asking is, what kind of exercises make differences? Whether one exercise is more effective than others in terms of extending healthy lifespan. Do you have the data in terms of what kind of exercise is more meaningful?
I mean, we're doing a lot of work, and again, I'd like Emil to indent on this, but I think we're seeing a lot of work. Steps are a simple issue, but heart rate variability and VO2, those kind of measures are very, very correlated to low levels of heart disease, better health span and better lifespan. And so the kind of exercises that actually create that kind of outcome are very, very powerful. And I think this heart rate variability is a crucial issue. We have the device data to measure it. And those are things that we should be much more, I think, specific about what actual physical activity. At the moment, I mean, just given the currency of steps, it's an easy way to get people in. I think as we personalize more, we should be kind of having the exercise of the week. We should be flexing it, etc. There's a lot of work now on high intensity, but things that drive up VO2 and increase heart rate variability are exceptionally good. I don't know, Emil, if you want to add to that.
Yeah, absolutely right. So it's about fitness, it's about regularity. For people who are not exercising, it's about the regularity, it's the habit building. But what we see also, it's a very good question, because in some contexts, you can observe things in the data. For instance, in COVID, we saw a major effect on mental health from outdoor exercise. If you can see in the data, people are exercising outdoor versus indoor, and you can see there's a difference there. So again, depending on the context, you can see different effects, but the message is pretty consistent all the way through. Build a habit, regularity of activity, and then build on that towards greater fitness, and all of that is additional benefit that you get.
Thank you so much. I think we still have a lot of questions that we didn't get a chance to answer them, but I think we were recording all the questions, and I think Alan and I can facilitate in the communication with both of you, and we can deliver more conversations in the future, right? So I think for now, as a time,
I think we have an additional 15 minutes. I think we do have 15 more minutes for questions.
Oh, really? Oh, that's great. I saw we end at 11. So then we want wonderful. So I think that one question actually, Amelia, you kind of touched base already, right? So one is, I think one value about the vitality data is you have to cover many, many years of data, right? So one question is whether you're observing difference from time to time, particularly, right? So as you mentioned, is during the COVID, right? So whether the data during the COVID is different and from the post-COVID period. Oh, I guess other dip period. I think if you have any comments on that.
I mean, just a point, I mean, you can talk to this, but just one point. The data is kept live, so it's not, the critical thing of longitudinal data is you can always look back and track back what happened to make observations today. So the scale of the data is critical, that the history is live. That's what makes this data so unique. So check out longitudinal stuff now, post-COVID, what happened, what we thought about a few years ago may be different now when you look at the same data and you track it through to today. But Emil, maybe talk to the specifics of that question.
Yes, yeah, again, a great question. I mean, that was the one big event that we could see worldwide as an impact. The fascinating thing about that was, I mean, all of this is about lifestyle, which obviously means that it has a big impact on non-communicable disease. COVID was communicable. Fascinating thing is that we saw much better outcomes for people who exercised also when they got COVID before the vaccine was available. And again, you could see that difference there. So it seems as if, can't emphasize it more. Exercise, sleep, all of these things are fundamental healthy behaviors that come up in the data all the time, and it has an impact almost regardless of what is happening with global or with population health. The other thing that's possible to track, which is also very interesting, is as we change the targets that people have to meet in order to get a reward. So for instance, at a point in our program, we said, well, if you turn 65, we're going to change your step target. And then it was very interesting to see how people respond to that. The people who, this was a few years ago, it used to be 10,000 steps, and then we took it down to 7,500 steps. How many people did actually do that? Do we see an impact? How do we see the engagement changing? So it's both on the behavior side and on the outcome side that you can observe the effects. So there's a level of consistency all the way through. Exercise is always positive. It always has a big impact. It has an impact on cancer, on mental health, and everything. But it's also it's even when things change, you see additional effects coming through, which is very valuable.
Wonderful. And I think there's one really great question from Stephanie Mark, and I want to switch the angle slightly away from the physical activity, right? So the question is, insurance system historical reimburse and recognize the impact of physical activities. And however, the social connections and cognitive engagement and also emerging as critical biomarkers for long-term health outcome. So do you see this would become area of organizations to incorporate that into incentives?
I think definitely we know that from the data and the science that social interactions, being socially active, is a critical piece, especially in advanced age of health span and lifespan. Harder to measure and harder to incentivize, but if there are ways to do that, I think that is something we'll build into the program. Emil, I mean, some thoughts here. There's a lot we do around, for example, park runs, which are now a global issue of incentivizing people to get out there and be part of a park run where in a sense you're inducing or incentivizing physical activity, but in a kind of social construct. There are a number of things we do, but I think it's a frontier for us. It needs a lot more work. Your thoughts, Emil?
Yeah, exactly. So where it makes sense to have group activities like with running, park run. In South Africa, we have the biggest running club in South Africa, the Vitality Running Club. So we encourage social people exercising together. And again, that helps both with the persistency of activity and the benefit that it brings. There is also some mental health technologies becoming available. So again, during COVID, online CBT became like a big thing that people started to use. So it became there quite obvious that the people who exercise and who made use of online cognitive behavioral therapy, they had better outcomes during that period when there was a lot of stress around. So I think technology will in some way also help us to connect people in a better way through the program, but we're constantly looking for opportunity to encourage social interaction.
Mm-hmm. Absolutely. I think that's such a big topic these days now. So I think I also want to turn to another question that is also Ellen raised with before, right? So I think one very impressive model, the idea is this shared value model, right? So there's a shared benefits between insurer, society, and patients. So I think want to hear, and you also collaborating globally, right, across different countries. I think when it comes to the healthcare, there are two types. One is like the US, Canada, there's more insurance based on the private insurance company. There's versus system like Asia, UK, that is more reliant on those public health systems. So do you see this, how do you see these shared value models and operates differently, incorporate difference in the different systems across the world?
It's a complex question, but to an extent, if you look at for example, in the UK, where you have the NHS, which is an incredibly dominant, powerful national system, we are still covering people in the private system, and the economics are the same. So to an extent, freeing up that surplus to share with incentives works incredibly well, and the beneficiaries of that is the NHS and society. So using the private funding of health insurance although it's probably a smaller amount than it would be if you didn't have a national system. It works exactly the same. So, I mean, our model is completely scalable and repeatable across any system. It's just the quantum of economics you have to play with. If you're in a US system and, it's $1,000 or more per month for health insurance, there's much more, there's a bigger prize to play with. If you've got a life insurance policy of $10 million, you've got a lot of value to play with, So, but the model stays ostensibly the same. It's a good question about whether government, I mean, Brazil has been quite successful with kind of conditional public programs where based on certain behaviors, you get certain benefits. I think that, I mean, that's fraught with all kinds of complexity. But as I said at the outset, government is the only other actor through the tax system that is a beneficiary in a sense of longer health spans, and less healthcare costs. If there's a way to use incentives to do that, it would be very powerful. We've had a few kind of stop-starts with some cities in the UK, for example, that wanted to use the system at a citywide level. Singapore does this now at a country level. So, we work with AIA in Singapore. Our program now kind of works in lockstep in a way with the government program around incentivizing better health. So sorry, a long answer making the point. It's the extent of economics that's available. The model itself works, and it should work in public and private. It's just, is it premium revenue or is it tax revenue? But again, its complexity is its execution, and again, I think that there's no reason why these AI models and what we are building, given the data, can't work at a kind of a public sector level. I think, Emil, to make the point, we are, work with any public sector, we make up data available in the right form so we can be helpful. I think it's an incredibly exciting time.
Yeah,
Which is part of why we also want to publish via academic partnerships, because
yes.
it's important for everybody to know the impact that this has. Yes.
Right, absolutely. So I'm picking another question from the audience, right? So I think the participants probably vary and by their natural frailty levels, right? So for example, there might be individuals who are over age of 65 and who have survived the cancer. They've probably never been able to reach the highest level from your program. So, and how does the program accommodating and the different subgroups and especially along the aging process?
That's a brilliant question. If the program works well, it shouldn't matter your status. In other words, you're incentivized to do different things. So the test of its efficacy is that your probability of getting to a high status is independent of your level of sickness. In other words, you're just given different things to do. So obviously in hugely advanced illness, that's a different point. We need to be respectful of that. But if the program works well and the models work well, the reality is that you should be incentivized to do different things based on risk factors, and therefore there's no discrimination, no difference. And that's what makes I think that's the complete efficacy of the model. The fact that you should be able to get to the gold status, whether you're a 20-year-old champion marathon runner or you're a 70-year-old with 5 different chronic illnesses. It's just what you're doing is different, and how you communicate is different, and the incentives you're given are different. If the program works, there is no difference. And I think that is at the core of coming back to that pricing of health insurance. I think you then can flex based on how you engage with. There should be no difference between people. That's the key. And again, I think AI makes that, the Vitality AI, the specificity and the personalization makes that possible.
Maybe just a quick thing to add, because it might not be that obvious from what we said, but we also focus on healthcare actions. So we can see from the data, for instance, diabetics, they should do 6 things a year. Despite the fact that we pay for all of those 6 things, 95% of diabetics don't do all 6. So that's an obvious opportunity to incentivize. And for a diabetic, that's what we'll focus on if they don't do it, if they don't get the HbA1c, if they don't see the doctor frequently enough. That's also habitual behavior. So it's both, it's all about health actions in the healthcare system, plus sleep, plus exercise. All of it comes together in the personalization.
That's great. So I guess we probably have time for one more questions, right? So as one question also from several audience is, as a Vitality switching to Vitality AI, right? So as more AI capacity has been built in, and if you think about the future, right, 10 years from now, so if you're able to name like one single biggest opportunities for how AI can change in health and how changing health and longevity, and what that will be.
I think importantly, I know, Ellen, you've thought a lot about this, the issue of disease, the absence of disease being health. I mean, in the curative system, there's a million things that are going to be done, drug discovery, etc. Our piece is wrapping around that, and I think our ability to really make people healthier at scale, to Linda's point, to expand health span at scale is what I think we'd like to do. I think the issue of genetics, when those correlations are much better understood, building that in as well. So the pathways that are recommended take into account, the specific genetic makeup, that becomes even a more exciting issue. At this stage, it's not yet feasible. But I think for us, if we can get to a level of incredible specificity and change behavior at scale, I think that's the journey we're on. I think that is what AI will allow us to do. Until now, I think all the stuff was kind of in categories, but you could never have the true efficacy of everyone is treated equal. You'll have a program that fits some and not others, and that's a problem. So this is an exciting new world.
Oh, yeah, I think, thank you so much. And it's been an amazing, at least for me, an amazing discussion that really brought us to many different aspects. I think this model is just paradigm shifting, whether we're talking about the biostatistics, the view of health, the view of markets. And so it's really interesting to see all of that coming together in a way I think also that we can see from the questions joins very well with a lot of the interests here. Also for behavior change, right? I think that's, a very obvious major field that's of interest here and that you're shifting. So on behalf of everybody here at the School of Public Health, I'd really like to thank you, Adrian and Emil, for being with us and for this wonderful exchange. Thanks, everyone.
Yeah, thank you.
Thank you. Great pleasure. Great honor. Appreciate it.
Bye-bye.
Thank you.
Bye. Bye.
Bye.